Hi everyone, welcome back to One CFO's channel. In today's video, we will talk about the legal ways small businesses can lower their taxable income. If there's a common headache among small business owners, it's managing and paying income tax. One has to ensure that timely and accurate payments are made. But small business owners should also know ways to lower taxable income. The legal way, of course. We will go over the tips on allowable deductions to help small business owners save on tax payments. Remember, this video aims to give you options for reducing your tax liability, but it is up to you to determine what you will do with this information. Working with a bookkeeper or CFO is recommended to determine the best tax strategies for your business and how to implement them. Now, let's dive into the strategies that can help lessen your taxable income. Tip number 1. Deduct your interest expense. The interest tax shield is one way to reduce tax. Businesses that borrow funds for short-term or long-term expenditures can take advantage of the interest paid on loans as deductible expense. Suppose you borrow funds to buy a truck to be used for the delivery of your goods, you then pay interest on the borrowed funds. This interest is tax deductible, which can be used to offset the business's taxable income and reduce the tax burden. Tip number 2. List down your utility expenses. If your business has a physical presence or an office, then utility bills are part of your regular expenses. Even working from home, you can deduct utility expenses from your business income if adequately documented. Start writing off utility expenses to reduce your taxable income. These include payments for your electricity, water, and communication bills. Costs like Wi-Fi and phone subscription plans also fall into the communication category as long as these are used for the business only. Note that official receipts must be under the company's name to claim the amount paid for utilities as deductible expenses. Tip number 3. Pay your employees' government contributions. As employers, you must pay your employees monthly contributions to SSS, Pag-ibig, and PhilHealth as part of the mandatory benefits required by the Labor Code of the Philippines. Luckily, government contributions to SSS, Pag-ibig, and PhilHealth are deductible expenses you can use to lower your income tax liability. The first step is registering your business and becoming eligible employer members of these agencies. Once done, you must remit both the employee and employer share of these contributions. Since you are taking the employee share directly from their salary, you can only use the employer share expense as a deductible for your income tax. Tip number 4. Give your employees more benefits. Offering fringe benefits to employees helps reduce your income tax. Fringe benefits are benefits added to your employees' compensation, including holiday bonuses, educational allowance, housing assistance, club memberships, subsidized cars, and more. The monetary value of these added perks can be treated as a business expense, which you can deduct from your gross income. However, fringe benefits granted to managerial or supervisory employees are subjected to fringe benefits tax, which is 35% of the benefit's monetary value. Some exceptions are benefits related to health and retirement and those given to rank and file employees. If you end up paying fringe benefits tax, worry not because this tax expense is also an additional deductible from your gross income, further lowering your income tax. This is a win for your employees too, as they enjoy additional benefits while you keep your star talents. Tip number 5. Claim representation and entertainment expenses. Having someone represent your company in meetings, conferences, or travels is also typical in business. These representation expenses include flight tickets, hotel bookings, and meal expenses during the event. You may even offer entertainment or recreational activities like parties, team building activities, or dinner events to show your clients and employees appreciation, which also means higher spending. The good thing is, these representation and entertainment expenses are deductions you can use to lower your tax liability. Take note though that as per BIR regulations, this deduction is capped at 0.5% of net sales if you sell goods or 1% of net revenue if you sell services. Tip number 6. Bad debts. In the normal course of your business, your customers will pay you outright or on a future date. However, there will be instances when they can no longer pay what they owe your business. Once uncollectible, the amount that the customer owes is now considered bad debt. Since this is a loss on your end, you can use this as a deductible expense for your tax. But before doing so, you should first exhaust all your options in trying to collect the debt. You can repeatedly send invoices, contact customers, send demand letters, and even file a collection case. If the debt remains unpaid after all these efforts, you can now prove it as uncollectible and deduct it from your income. Tip number 7. Consider the depreciation of your assets. Another way to lower your taxable income is by treating asset depreciation as an expense. To accelerate depreciation in the early years of the life of an asset, a recommended method is the double declining balance or the DDB method. Lower your taxable income during the first business years through the DDB method, especially for assets that quickly depreciate like cars. Tip number 8. Donate to charitable organizations. You can also use charitable donations as another tax deduction to lower your tax liability. Generally, this deduction is only 5% of your net income. However, 100% of your donations can be deducted if you donate to non-government organizations accredited by BIR as a donee institution. Donating to the government or its priority projects also means a full deduction from your gross income. The priority projects are those under the National Priority Plan determined by the National Economic Development Authority or NEDA. Plus points in donating is your way of giving back to communities and supporting different advocacies. Bonus tip number 9. Register your business as BMBE. If you're only starting or growing your business and have less than 3 million pesos in assets, you can register your business as a Barangay Micro Business Enterprise or BMBE. You can enjoy exemption or reduced local taxes or fees depending on your local government. By becoming a BMBE, you can enjoy perks such as being exempt from paying income tax. Other advantages are being exempted from the minimum wage law, being prioritized for a particular credit window, and receiving training and assistance from different government agencies. So there you have it. We talked about the 9 business strategies that can help lower taxable income. If you capitalize on these strategies, you will pay less tax and save money. You have more cash to support the business operations or buy that much needed equipment or software tool to increase efficiency and revenue. Consult with your bookkeeper to learn how to take advantage of these tips for your business. Thank you and hope to see you in our next video. In the meantime, please like, subscribe, and press the notification button. This is once again a video presented to you by One CFO, your partner in growth.